Hi, good evening, everyone. Waiting for more people to join before we can start. Good evening, everyone. Please, can you hear me? Let me know if you can hear me. Hello.
Yes, we can hear you clearly.
Yeah, loud and
Good
clear.
evening. All right. Good evening. Good evening, everyone. How are we all doing? My name is. Can you hear me?
Yes, we can.
All right. So, to today's business, I'll be very quick so that we can all head back to our rest for today. And I want to share my screen a little bit. I'm coming. Can you all see my screen?
Yeah, yes, we can see your screen. We can see your screen.
All right. So today we're talking about from mortgages in general, and topic is from dream to deed, navigating the mortgage system in real estate. That's our topic for today. I'll be sharing some insights about how the mortgage works and how we can, get our properties through mortgage. Straight to the topic of today. Here, I'm talking about the mortgages itself, the types of mortgages, and the particular one I'll be introducing to everybody, which is the MREF. And the benefit of MREF mortgages, the eligibility criteria, the application requirements, our target market, and the risks, and how to avoid them. Yeah. So straight to the business. Mortgages in general is just, it was introduced to make life easier for those of us that were not so bogus or so rich enough to buy properties at a stretch, so we can apply through mortgage, which is like a loan, and get our properties. Do you understand? So it's just a very easy process, but it made life easier for us, for some of us that can't buy a house outrightly. So what is mortgage? Mortgage is a long-term loan. Let me move this a little bit. I'm coming. Mortgage is a long-term loan, specifically used to purchase properties in real estate. That's like the whole essence of mortgage. You used to buy properties, the ones that you cannot buy, like the ones with like maybe say 20, 30 million, you cannot buy at once. You use mortgage to buy them. You acquire them through mortgages, which is easier and more comfortable for some of us that can't buy at a stretch, like I said earlier. And there are three parties involved in mortgage, which is the borrower, the lender, and the guarantor. The borrower is someone that is how do I put it? Someone that is borrowing money from the bank, like you're the one that wants to borrow the money from the bank. And we have the lender, which is the one that is giving out the money, the one disbursing the money. And we have the guarantor, which is quite optional in some cases, someone that is there to like an what's the word now? I can't remember the word to use, sorry, but guarantor is sometimes optional because not every transaction needs a guarantor, but for some of us, for some companies or some institutions that can't vouch for a borrower, they have to bring in a third party, which serves as the third eye to such transaction. And we have the basic structure for mortgage, which is the principal, the interest, and the term. Principal is the original amount being borrowed. The interest is the cost of borrowing paid, which is the over cost being borrowed, the pay that is paid to the lender. And the term is the duration over which the loan is being repaid, say 15 to 30 years, depending on the type of mortgages you're trying to buy from. Then straight to types of mortgage we have. I mean, we have like over 5 types of mortgages in Nigeria or even outside the country, but there are 2 major types, which is the conventional mortgage and the government-backed mortgages. The conventional mortgage is offered by private banks and financial institutions, which is like is not backed up by the government, and they typically require the higher credit score from the applicants. You have to have like a good credit score where you can borrow such mortgages, and larger down payments, which is the equity contribution, like deposit, that's been bigger or more bigger than that of the government-backed mortgages. Therefore, the government, which is the MRIF, NHIF, even FHF, there's so many types of mortgages under the government backs, and those ones they offer low interest rates and they're flexible. They have a very flexible repayment term and longer tenures to pay back. All right, that one is ideally for first-time buyers, civil servants, low to middle income earners. So most times people go with the government backs because of its benefits. Oh, yeah, most people go with the government-backed mortgages, which is quite beneficial to most of us in Nigeria. Then what is MRIF? MRIF is the full meaning of MRIF is Mortgage Real Estate Investment Fund. It's a government-supported mortgage financing program, which has been designed to make homeownership more affordable for low to middle income earners, and it provides low interest rates. The interest rate is 12% per annum. Yeah, per annum. So it provides low interest for people that can't apply for the conventional mortgages. So that's why MRIF was initiated, to help people that can't afford the big conventional mortgage plan to go for. Then we have the major parties involved in MRIF, which are the arm. The arm is the fund managers. They are the fund managers and the fund providers who and also the mortgage banks who are direct lenders. So we have like the major parties involved, which are the arm and the mortgage banks. Do you understand? And the MRIF recently released 250 billion in funding, which is being disbursed to qualifying private mortgage institution. And the 250 billion was divided into 2 phases, where we have the first phase, which is the 150 billion. And this because they want to be able to account, like they want to be able to manage the funds being disbursed. The 150 is like the phase is likely intended to kickstart the initiative, support early projects, and test the effectiveness of the fund. While the second phase was 100 billion, and after the first is implemented, good, like if the first phase has been really managed and good, they will then release the second phase, which is the 100 billion. And this approach allows for better control of the funds, for risk management and the ability to make adjustments based on how the first phase performed. So it's just a very good, it's a very good opportunity for those of us that are looking to getting our properties. And this year, it's a very good scheme that was introduced, because I, for myself, I really, really am in love with this MRI, because it gives me so many opportunities to get houses, to get properties, because this year, the aim is to get as much as possible properties that you can buy, which is an investment anyways. So, that's why MRIF was initiated. Then we have of course, the benefit of MRIF, where we have the low interest rate, which is 12% per annum. We have the longer repayment periods, which is up to 20 to 30 years, depending on your age bracket. Then we have the reduced upfront cost, which is the equity contribution. Is 20% of the total amount of the property that you want to purchase. Then we have the fast processing time, because most mortgage applications take like, say, 5-6 months, but MREF is like 1 or 2 months, and your application will be processed. Then you can apply, you can get your loan less than 2 months, maximum of 2 months, which is quite adorable. Then and it supports the national housing good, because we realize that people that don't have houses, people that are renting houses in this our age and period is so high. So we want to try to cut down that percentage by making people have their own houses, making them have their own peace of mind, you know. So the MREF also supports the national housing goals. Then applicants can access up to 100 million depending on your financial capacity. You know, and I think one of our highest houses, like the rate of our houses now, like maybe 72 or 73 million, which is never up to 100 million. So you have no excuse not to buy house from us this year, you know. So applicants can access up to 100 million depending on your financial capacity. You know, there's so much benefit and so much flexibility with MREF. It's just so nice. I mean, so nice. Then we have the criteria that will require of you before you can apply for such a loan. You know, we have Nigerian citizens that age between 21 to 60 years, because that's the age bracket of people that, you know, that can still work and repay the loan. So that's like the age bracket that is required of us. If you are more than 60, you might not be able to apply for such loan. Then we have the satisfactory credit score. I mean, you have to have a good credit score. Your bank account has to like be really nice before you can apply, because that's what they use to check if you're good enough for the loan. Then of course you have to have a deposit, which is the equity contribution, and it's just 20%. Other mortgages use 30% of contribution, but MREF goes with 20% of the total amount of the property you want to buy, you want to purchase. Then it's mostly for first-time buyers. Those of us that have not gotten houses before, that don't have houses in our name, this is a good opportunity for you. So this is something that you can look into, because it's really nice. If you would not lie, this MREF is just a good opportunity for those of us that don't have, like I said, big amounts for houses at once. Here is a big one for us. Then we have the application requirements. These are required. These are necessary documents that, I mean, it's just some of them, but the very important ones. I mean, they'll still give you some other ones that you'd have to have, but these are the very important ones that you need for the loan application. You have to have your valid means of identification, your proof of income, which is your bank statement. Then you have to you have to have a credit worthiness review. Your bank, it all boils down to your bank statement. That has to be clean. That has to be really nice, because there's no how they would, I mean, if your salary or your income is coming like once in 6 months, there's no how the mortgage bank would assess your application. So you have to have a credit worthiness review. Then you have to have a proof of employment or business ownership, because that is our target market. A proof of employment or business ownership. You have to know those that are selling properties for, and how well they can, you know, pay back the loan which they have been applying for. Yeah. Then our target market as a company, as P1 stars, are those in paid employment, those that earn up to 1 million naira upwards, because that way it is easy for us to manage the funds coming back to the company, the funds being paid back for the loan you borrowed, you know, because you can't be earning 200 or 300k and you want to pay back a loan on a monthly basis. Of course, we have to think about your expenses and everything. So you have to have like a good salary that can pay for your expenses comfortably and also pay back the mortgage bank comfortably. Do you understand? And also we have to have individuals who are ready to pay the equity contribution, which is like, because it's like you have like a down payment which takes like maybe 1 or 2 months before while you can pay that money. You have the chance of paying that first deposit in the first 1 to 2 months, maybe 3, but it's not entirely flexible. But that one is like 1 to 2 months. So you have to have like a ready cash for that contribution. Then also individuals who are within 21 to 50 years. I said earlier, individuals that begin 21 to 50 years. Then also, sorry. Also, and funny enough, we've processed mortgage application for somebody already, and they already have access to their loan. They already bought our property, and they're already in the line of paying back after, say, maybe 4 or 3 months. Like, we already processed a loan that is successful. So, and we still have other ones in processing, which in a couple of maybe a month or less, they would also be able to access the loan. And also we have for those of us that have pension and RSA, you can also access your RSA accounts for your equity contribution. If you don't have such money, like such ready cash down now, and you have quite a lump sum of money in your RSA, which is the retirement savings account, you can access it for the equity contribution while you pay back the monthly payments later on. But if you want to, if you're really, really interested in this opportunity and you have quite a lump sum of money in your account, you can pay back. You can borrow it. You can take it and use it to pay your contribution, your deposits, before you pay back your monthly repayments. Then we also have very important risks. This one is very, very important for us to understand. Sometimes we do things without even, like, we have in documents where we have so many important messages, and we don't read through. This is where the risks involved and how to mitigate them comes in. I'm going to take this very, very slow so that we can understand. When you default on your payments, number one, defaulting on payments. When you've paid your equity contribution and you're supposed to be paying your monthly payments and you don't pay it, there's an issue, because sometimes it's either we borrow more than our income capacity, or we just forget. There's just one thing that happens and we default on payments. There's so many issues that can happen before somebody can default on the payments. So what I would say, how we can avoid such a risk, is to borrow within your income capacity. If you know that this house I want to buy is just, I can afford only 40 million, buy one bed, or the one that is within your limit. Don't go above it thinking that you can pay it, and because when the time comes you can't pay it, there's an issue. So let's always borrow within our income capacity. So we can also choose fixed or low interest mortgage plans, because some mortgages, they increase over time. But if you know that you want to choose, if you're choosing low interest mortgage plans, you're safe. Like MRIF now is a fixed interest rate, no increments, no decrements. It's a fixed one, so you already know how much you're going to pay back when the time comes. And also, if you can set up automatic payments or reminders, like in the next 3 days I'll be paying back a sum of money. Have a reminder so that it reminds you that you will not forget that payment, because sometimes we forget, and we are all going through life at the moment, and sometimes we might forget to do some things. So let us always set reminders so as to remind us on when and how we should pay our monthly payments back to the mortgage banks. Then we have hidden costs, fees like legal fee, infrastructure fees, appraisal, or insurance costs. There are fees like that, but some of us don't ask, and we don't know. Because in our offer letter as a company, we have such fees there. Only if you don't read it. We have everything stated there and it doesn't change. All the fees are there, the legal infrastructure, everything is all written there. So we should always learn to read and ask for a full breakdown of these fees before we commit. Let's be so patient when it comes to paperwork so that we don't miss out on some things. Let's always ask for full breakdown of these costs and what it means, what it's being used for. Be fully aware, so that you're not shocked in the next future that this money, what's it for? You already know what they are for. So work with, and also you can also work with transparent developers. Don't just guess that these people, they will not be. Let's do a due diligence as an individual. Know what you are going into. Even as a company, you can still go online, search for our company, and be sure that okay, these people, they are very, very real. Do your due diligence as a person before you commit to such a company. Then we have rising interest rates. It can be monthly payments, it can be increased, it can be even the interest rate, like I said earlier. Just know or choose a um a good mortgage bank. That's why we brought you MRIF, so that MRIF is like MRIF is very clear from the beginning, from the onset. You know that this is what you are paying for. This is your interest rate. If it's 10, if it's 12, you already know. So you have to choose fixed rates or government-backed mortgages options. Don't just go into anyone because you are seeing it online. Be very, very sure of the ones you're going into so you are not caught up in the future unaware. Then understand the terms before signing. If you need a consultant to help you read through, or you have to go back to your lawyer or something, just always read the terms before signing any paperwork that has to do with mortgages, because it's very, 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 very sketchy sometimes. They just tell you that this, but if you don't read through yourself, they just give you anything to sign, and after signature work like this, you're already in trouble. So always read and understand the terms before you sign any paperwork that has to do with mortgages, please. Then the poor property choice. Desire buying overvalued land or building or legally disputed properties that can result in losses or court cases. Don't be in a rush to buy properties. Like now, all our properties, either we have our deed of assignment, our title of O before we even put it in the market. We don't risk our clients having such headaches in the future. All our properties are they're all titled. They're all titled before we even put them in the market at all. So we have no issues at all with the titled lands or titled buildings or anything. They are all titled. So you can also conduct your thorough due diligence on these properties as well before you buy. Aside us telling you that it's true, this property has been done, there is no problem on it, to still do your own findings so that you be sure, so that you not be told that you won't say that they told me, but still do your own due diligence and be sure of it that okay, this thing is really, really clean and good to go. Then you can verify your land titles and approvals before you go into any of these transactions. Then I think I was too fast. Then let's go back to our Q&A. Do you have any questions, please? Feel free to drop any questions you have in the chat box, or I can... Sorry. Do you have any questions? I'm just coming, please give me a minute. Any questions? You can raise your hand up in the Mr. Uchi. Yeah, that's fine. Coming, I can't see. Okay, can you hear me, Mr. Uchi?
Yes. Good evening, ma'am.
Good evening, sir.
Actually, thank you very much. I am interested in this topic because before now I don't actually understand. Okay. Yes, but I want to make a request, ma'am.
All right.
Please, my network was giving me trouble, problem off and on.
All right.
The version available, may I on the chat platform. Please, I want to have the recorded version so that I can listen to it again.
All right. Of course, I'll share it to the group. I'll share to the group, and also my slides too will be shared there, so that we can all go through it. Yes.
Okay. Thank you very much.
You're welcome, sir.
God bless you.
Amen, sir. You too.
Yeah.
Anyone else with questions? I'm sorry, Miss Elena. I think I talked too fast. That's my kind of person. I'm so sorry. I'll share my slides and the recorded version of it on the group. I'm so sorry, please. Mr. Kufre Umo says, is PWAN starts currently selling properties that someone can key into? Yes. Yes, we have so many properties in the market right now, and they are mostly on in Shangotedu rather. We have about 2 or 3 in Monastery Road, and we have another 2 and 3 in Ajayapata New Town, or in Shangotedu. Yeah. Then Mr. Benson, you said good evening to you too. Thank you for sharing. Could you please explain the MRIF process again, and how is it better than the FBN and the CHEF mortgage? Okay, the MRIF, like I said earlier, is it was initiated to help first-time home buyers, yes, to acquire properties. And the beautiful part of it is that that's low interest mortgage. Like the interest rate is 12%. I know NHF is, I think, 10%, but this one has a very fast processing time. That's like the very sweet part of it. It's very fast and it's very, very dependable. And it's very what's the word now? I think I lost my connection. Hello? Can you hear me? I think my connection was lost. Okay. Thank you, Mr. Emmanuel. So like I was saying, the MRF is a very good scheme because it was initiated for first-time home buyers, and also because of the interest rates and the processing time. That's like the very important and very crucial part of the MRF. It's an initiative which was being raised because of low income to middle income earners. And for the process flow for applicants, I would refer us to an FAQ, which was being generated by our company, where you can read through and get other good information about MRIF as a whole. Because I might miss some details that might be important, yes. But I'll share us the FAQ so we can all read through and be fully aware of the MRIF very well. Is that fine? Okay, Mr. Man, I have a question, please. Can you raise your hand? Okay. A minute, please.
All right. Good evening, everyone.
Good evening,
Thank
sir.
you so much for this wonderful presentation.
Yes, sir.
This is my question. So you said for MREF, you need to do a 20% contribution. For instance, let's say you want to access 100 million naira loan. Now, my question is, let's say we have let's say 1,000 people in Nigeria, for instance, that got to find out about this, and then 1,000 people have contributed 20 million naira each, and they are applying for 100 million each. Well, from my little research, I know that there are about trillion funds, something like that. But my question is, people are applying for it. How, let's say 1,000 people qualify for it. So how are they going to manage to cater for these people, considering the fact that they only did 20% contribution at first, number one, and the repayment time is also longer with just low interest rate. So how are they going to manage? Will it make it? Can it get to a point where you've contributed, you've qualified, but then because there are a lot of applicants, you are not able to secure your loan as at when you are supposed to? That's my first question. And then my second question is, from your presentation, you talked about qualifying. It has to be, let's say, someone that is working in a particular place. There's proof of salary that you can earn, let's up to ₦1 million and above, so that you can be able to do the repaying. Now, how about other set of people that are not working as per salary? Let's say they run a business or they freelance on a job, and then they can still make this kind of money, but there is no proof that, let's say, for salaries, you can submit, let's say, your payroll or payslip, something like that. But for these people that are freelancing, that they know they can make this money or they make this money, maybe the account balance inflow can actually show it. How do we factor this set of people in? And how do we show a proof that this will really qualifies, even though they are not working for a people, even though there is no pay slip proof that they actually make this money on a monthly basis? That's my two questions. Thank you very much.
Yes, sir. For the second question you asked, like I said, the MRIF is for employed people and business owners. And either way, you still have to drop, like, you still have to submit your what's it called now? Your bank statements, because that's the only way they can verify that you are truly a business owner, that's like you have like an income. Not like income. When I mean income, is not only for 9 to 5 hours. You can be a business person and still have income. So of course they will need something to work with, which is your bank statements. So either ways, be it a salary earner or a business owner, you still have to submit your bank statements. Do you understand that? And for the first question you asked about if we have 1,000 subscribers that want to apply for the loan, I'm not entirely sure of that question, because I mean, they would have a way of mitigating the issue when such issue arrives, right? Because before they put out the initiative, it must have been aware that that people would really, really want to invest in it. So I'm sure they'll have such thoughts or such replies, such people to such a question, right? Because I can't really answer that, very honest with you, because I'm not really, really in the mortgage system. But I can assure you that as many people that applies, if they qualify for the loan, they will get it. I'm very sure of that. I'm very sure of that. Mr. Benson, yeah, you asked. Thank you for your response. MHF processing time. MRIF takes 1 to 2 months. Yes, 1 to 2 months for the process, for the applying process. 1 to 2 months. Any more questions? Mr. Emmanuel, are you okay with my response, please? Mr. or Miss Lawa, I'm not too sure, please. I want to understand that PM fully involved. Yes, ma. Yes, ma, or sir. They're very much involved. They're very much involved in the disbursement of the funds. Any more questions? MD, do you have anything to say? MD, do you have any additions or subtractions or contributions? Any more questions before we call it a day? Okay, so I would share our FAQs and the flyers to the group where we all join this call so that we can see the properties that we have available in the market and also get more knowledge on MREF as a whole, so that by the time we've gone through it, by the time we know what it takes, you can always reach back to me on the group if you want to move forward with the scheme, because it's a very good one. I must confess, it's a very good one. If we are qualified and we can, do our normal due diligence, it's a good one for us to buy property this year, because I think everybody in Nigeria deserves a property of his own. And sometimes, even if we not stay in the house or the property itself, it can serve as an investment where you can either rent it out or use it as Airbnb. It's just it's not really for us not to participate in this scheme this year. So if you don't have any more questions, I think we can call it a night. So we can all go back to our Sunday activities. And feel free to drop any questions in the group chat if you have, and I'll be happy to respond. Thank you all so much. Thank you for joining. God bless you.
Thank you. Sorry, this is I think one Ishaya is raising up his hands or her hand. I don't know if you answered that question.
Oh, okay. Let me check, please. Okay. Good evening. Can you hear me? Good evening, Mr. Ishaya.
Yes, good evening.
Good evening, sir.
Thank you so much for this elaborate lecture, or let me say explanations and all that on the MREF. So
Yes,
my question is, can an organization or a corporate body apply for the MREF loan?
Yes, sir. Yes, sir, you can.
Okay, and the ceiling amount is still 100 million like for individuals?
I didn't get that.
The ceiling amount, the maximum amount for a corporate body, is it also 100 million like organization for like
No. That's like you can get up to 100 million, even more than, depending on your income or your bank statements.
Okay.
That's not the minimum. You can get more than that, depending on how qualified you are for it.
Okay.
But for individuals, like income earners, then you are a little bit down to 100 million. But if you okay. I'm sorry, sir. Corporates can apply. I missed that out. Only individuals.
Okay, because all through your lecture, you've been mentioning individuals and all that.
I'm sorry.
I think I had individuals who earn up to 1 million naira or above.
Yes, monthly, 1 million naira monthly.
So corporate bodies cannot apply.
No, sir.
Okay, thank you.
Thank you, sir.
Yeah.
Mr. Lambian, can we share? I will. I'll post it on the group. I'll post this recording and also my slides on the group so that we can all read through. I will. I'll post it. I'll post it. Any more questions? Any more hands? I'm trying to check the chat box, please. What is your government for? Is it possible that someone can qualify 10% and still don't get the loan? It depends, Mr. Emmanuel Umoren. It depends, to be honest. Sometimes you can apply, and if you're not qualified, they won't. How do I explain this? But sorry, if you qualify for the loan and you pay, yes, you can. You have no reason not to get your loan at the time whereby your processing has been done. You will get it if you do your things are right and you pay your 20%. Everything is good. You have no reason not to get the loan. I promise you that. You have no reason not to get the loan. So yes, you get it. if everything is good and well. So I think that's the last question I can find here. In the absence of no more questions, I think, yeah, I will share it. I will share definitely. I'll share it once I'm done with this. Once we are done here. No, the age bracket is 21 to 50 years. 21 to 50 years of age. 21, yes. 21 to 50 years. Zero. Should I call it out? I should just type it in the message so that we can all get it. Let me type it in the chat box. Come in, typing it. So you can reach out to me if you have any more questions on WhatsApp. I would respond. So yes, I've typed it. No, man, it's only Nigerians that are in Nigeria that can apply for it. Only Nigerians in Nigeria that can apply for it. Yes, ma'am. But then yes, only Nigerians in Nigeria that can apply for it. Yes, I will. Everything will be sent to the group chat once I'm done with this call. Everything will be sent there. And if you have more questions too, you can just ask me. I'll reply. I can't find any more messages. That is everything I can find on here. But in case I missed it, please send it back to me on the group. I'll reply there. I can't find any more messages. I think I've gone through everything already. Please, Mr. Benson, I'm not sure if I saw that message. Please, I will respond to you on the group. Or you can text me on WhatsApp. I'll respond to it. I can't find it here. I'm so sorry. So if we don't have any more messages, I think we can all go back to our activities. Thank you so much for joining. God bless you. God bless you so much.